Hi Rose, it's been a while since we've gotten together.
It sure has, Gil. Nice to see you.
Things got pretty crazy there with all the coronavirus stuff.
Indeed, and they are still crazy. Probably the most overhyped crisis ever, leading to the stupidest, most tragic policy decisions of the century.
The century is still young though.
Good point. So what else is new to talk about?
I've been following developments in the DeFi space with great interest.
Me too. That's been growing at a remarkable pace.
It sure has. Let's see if we understand it the same way. DeFi, short for Decentralized Finance, looks to me like a rewrite of regular CeFi, or Centralized Finance, from the ground up. The same basic functions exist, such as making loans against collateral, exchanging currencies, acquiring leverage, and earning a return on capital. The difference is that with DeFi, these things are done in a way that doesn't require financial institutions, doesn't need anyone's permission to offer an investment program, lets anyone anywhere run the program just by sending money to it, has no account applications and no accounts, just your wallet keys. Basically, it's like private banking but without the banks and accounts.
I'd say that's a pretty accurate assessment.
A good analogy might be that DeFi is now doing to the financial sector what Uber and Lyft did to the taxi industry.
Except there's probably even less chance of successful regulation. California is in court with Uber and Lyft right now, trying to force them to make all their drivers into employees instead of freelancers.
Yeah, while smart contracts running on globally distributed virtual machines aren't going to rewrite themselves just because some bureaucrat or judge says they need to work differently.
Exactly. That's the nature of permissionless. Anyone can write a smart contract and publish it, and anyone who wants to can use it. Neither the authors nor the users ask anybody for permission. Freedom and competition.
And yet the returns being generated by yield farmers are extremely high compared with the mainstream economy. Why do you think this is?
Well, innovation isn't being stifled by regulation and taxation, for one thing. For another, the high returns on capital are drawing more money into the industry. As long as that continues, we'll experience a virtuous circle.
Right. It also seems to me that DeFi enjoys these other advantages over traditional CeFi. Everybody can see publicly where the assets are. Therefore, since this is proof of collateral, making loans is safer. You retain control of your own money, instead of entrusting it to a financial institution. The third party in this case is a piece of published software. You can even read the code for yourself, if you have the skill. And if you don't, professionals who do, can review it for bugs and publish their findings.
Absolutely right. Because of the transparency and trustless distributed nature of DeFi, it's probably a lot safer than putting your money in the banking system. Which by the way is usually leveraged at least 10 times higher, and never publishes its source code.
You don't get deposit insurance or bailouts though.
And no moral hazard or bail-ins, either.
True. So let's do a head-to-head comparison between DeFi sans banks and regular banking. The returns are at least 10 times better in the new system.
Of course the banks are often earning that much too, they just don't share it with their depositors.
Naturally. Wallets are secure and anonymous. Accounts are fully identified with KYC, and can be locked or frozen at any time. DeFi is global internet, while banks are licensed by specific countries. Banks are run by executives and boards. Many DeFi protocols issue governance tokens, and the token holders can vote online to decide on policy changes and propose software updates. Banks serve the status quo, and act as a control mechanism. DeFi is like Moses crying, "Let my people go." The banking system is in a state of perpetual corruption, failure mode, and endless bailouts. The DeFi system is healthy and just getting started.
Bravo. Yes, I think that about sums it up. We do see the industry pretty much the same way.
I've been into crypto for years, because privately issued digital money is vitally important as an alternative to fiat. But now we're seeing the beginnings of an effort to rewrite the whole financial system and make it work for all the people, not just the Davos crowd and their captive political class.
Talk about exciting.
From less than $1 billion in total locked value at the beginning of June, to well over $6 billion by mid-August, that's exciting all right. I think this is going to be way bigger than the ICO craze a few years back.
And way better, because the world actually needs what DeFi provides, and the timing is perfect. Don't be surprised if we break $1 trillion invested in the space a year from now.
I don't think I would be all that surprised, actually. We'll get back together soon to do an update.
Looking forward. Thanks, Guildenchain.
Later, Rosencoin. Please see our video on the new DLira token, to find out how you can profit from DeFi yield farming, using DLira. Available only from cryptowealth.com.